Hello everyone, welcome to Valley Homes on TV. You joined us is Todd Flesner here along with co-host Debbie Giordano.
Hi Todd.
Thanks for tuning in on Channel 26.
Happy New Year.
Happy New Year 2016.
Yay!
Yeah, so we're excited about that. We're excited to be back for a new year of Valley Homes on TV, keeping you updated with news developments around Milpitas and what's going on in and around the real estate market. So, glad you've joined us. Debbie, you brought a guest for us today.
I have. It's my pleasure to introduce Alan David. He's a local CPA and just a great tax expert. Been at this many, many years, and we'll get to hear from him and get his information for folks thinking about their taxes.
Yeah. Well, thank you for having me.
Thank you, Alan.
Mm-hmm.
Good. We're glad to have you, and I'm sure people are thinking about getting W-2s and those sort of things. They're information starting to come in the mail from their mortgages and write-offs and deductions, so we thought it'd be a good time to chat with you about that.
Absolutely.
Yeah, all of that stuff should be coming out towards the end of the month. So
Great.
Get real busy here.
Well, let me start.
Okay.
Alan, tell us about yourself, where you grew up and where you were educated, and what brought you to this area.
Well, I grew up on the peninsula and resided in Milpitas for many, many years. What the attraction is, of course, climate, family, and opportunity. Above all, opportunity to do a lot of things, get involved, interrelate with people, businesses, and solve problems.
Nice.
Right.
And where were you educated?
Santa Clara University. Got my MBA there many years ago.
Nice.
So
Good.
No, good.
that's
So your MBA, that led you into the tax profession?
it did. In fact, I specifically got my master's degree in accounting and in tax, so I could focus and specialize in that area.
Okay.
Mhm.
Well, good. Well, what else then goes into the credentialing piece of that to be qualified as a tax preparer? And I guess a CPA is a special certification, correct?
It is. It is. It takes hours and hours of, and the rules have changed since I entered the profession. A lot of compliance, a lot of continuing education requirements. I believe now, if I'm not mistaken, it requires almost a master's degree to be able to sit for the grueling CPA exam, and then at least 2 years of experience working with a CPA to get your credential. And then, of course, it's just attending the school of hard knocks and experience, and gaining confidence and understanding and keeping up with everything, which is one of the challenges.
So, Alan, you mentioned continuing education. Does that mean you have to stay up with current tax laws?
Yes.
How does that work
Well,
in your business?
Certainly keeping up with the ever-changing tax laws, but since I'm involved with financial statements and audits, financial statement audits, working with clients, I have to keep up with things called peer review, which is the California Society's way of keeping tabs on you, which is a good thing. It's a good thing. It's a lot of studying, a lot of work, but I enjoy it, and I enjoy getting involved with my clients' problems, families, kids. It's not just a matter of sitting down and doing a tax return and running some numbers. It's big picture kind of stuff.
Sure.
Well, maybe what's the difference between someone who's, say, a tax preparer versus an enrolled agent versus an accountant or a CPA? How does...
Well, all of those people that you mentioned can qualify themselves to do tax returns. We're all under the same guidelines and regulations, compliance and so forth. A CPA is, I think, a broader profession, and enrolled agent is typically specific to just tax preparation. That's all that they focus on. Not always, but that's been my experience.
Tax preparation for individuals, for businesses?
All of the above.
Okay.
Yeah.
So let's just jump right in. You mentioned tax thresholds and when someone should file a tax return. Let's elaborate on that.
Well, currently it's figured to be about 20,600, I think, depending upon your filing status, married, filing separately, jointly, over 65, under 65, all sorts of rules. But it's around between 20,000. If you have income, including Social Security, W-2s, self-employment, whatever it is, when you're hovering around 20,000, and this is taxable income, by the way, this is minus deductions or write-offs, it's about 20 grand.
Okay, all right.
Okay. So under that, then folks don't have to worry about filing a tax return. Is there any
Well-
penalty if they don't?
Well, if they should have and they fail to, there would be a penalties for if there's a tax liability, which would be assessed on the tax liability. There are penalties all over the place. Failure to file, failure to pay on time, interest penalties, more penalties.
So is it probably wise, if in doubt, file? Is that a good piece of advice?
Well-
So what would you say?
No, I'd say the advice is to call somebody that understands these things.
Which we'll be giving your number at the end of the show,
There you
so
go.
there we go.
Yeah, just call.
Uh-huh.
And, and I hate to say, if in doubt, go ahead and file, because you don't want to open Pandora's box sometimes, too.
Okay. So, we also talked about tax complicities, is that, did I get that right, or is there?
Oh, compliance.
Compliance.
Not tax compliance. That's the major struggle is in not just my profession, but your profession, mortgage, business, banking. It's just the never-ending challenge of dealing with new rules and keeping up with it. And as soon as you adapt and understand what it is that you're supposed to do, they change it. So,
It sounds like a good CPA is worth their weight in gold.
oh, you bet,
You
yeah.
bet. Yeah, I can.
And we like to look at the big picture, not just, I mean, at least I do in my work, my clientele. We like to look at overall big picture planning, taxes of which are, I wouldn't say a small part, but they're a part of overall planning.
Okay. Well, you talked about some of the complexity, compliance changes for 2016. What sort of things should folks be aware of? I hear Obamacare and health insurance may be an issue. What are some of the things that folks ought to be keeping an eye on as they head into the tax season?
Well, first let me say that I don't see any major tax changes in 2016. What they've recently done is extended some of the good things or benefits from the previous years that were otherwise due to expire, like the ability to deduct mortgage premium,
Mortgage insurance premiums.
or mortgage insurance premiums.
Right. Mhm.
That was I think that was extended for 1 or 2 more years. If you're in business, you have a business, the ability to write off, it's called Section 179, election to write off newly purchased equipment. That was extended, and that's a very big deal because the limitation had been was $500,000, expected or legislated to go down to $25,000, which is a big deal. But they extended it. That's good. Some of the benefits, education deduction for teachers, child care, all good things. Who knows what's going to happen after election in next year. The biggest problem, big change is in Obamacare or affordable health care. You have to have it. Yeah, in some form or another, your employer has to provide it. You have to get it through your own means. If you don't, the penalty, when I was just looking at that, in 2014, it was...
These are for individuals without health care.
Yes,
Okay.
yes. If you don't have it...
Individuals or families, or how does that work?
Well, per adult.
Per adult.
Per person, per individual on a tax return. It was $695 I think that, yeah, that was for 2015. 2016, the penalty for just not having medical insurance is over $2,000.
Wow.
That's the maximum. I mean, it's based on a percentage of your income, but the maximum. I don't know where this is going to go. You know, I have my own personal opinion. The whole thing should be appealed, but you know what takes its place, I don't know.
Mm-hmm.
But it's very confiscatory, punitive, and it's a mess.
Okay. A lot of the folks that are watching the show, we do information for homeowners. Any other changes on the tax laws regarding things for homeowners? You mentioned the mortgage insurance. How about other type or investment property depreciate? Is anything else that's real estate related that?
Well, nothing really is changing. The exemption for or the capital gains exemption for homeowners when you sell your principal residence is $500,000. The first $500,000 is capital gain tax free for a married couple. For a single individual, it's $250,000.
Okay.
That there's no change there.
No change there. Okay.
And if you have a situation like in a foreclosure and you have a cancellation of debt, forgiveness of debt, it's called COD, on a principal residence, it's I believe it's up to $2 million of qualified debt that you don't have to pay taxes on.
Wow.
So that's a powerful thing. That it was either made permanent, and I just don't remember, or it was extended through 2016.
Good. Well, that mortgage insurance deduction too, that's a big thing for folks in this area because, you know, for first-time home buyers particularly, one of the challenges is that down payment, right? If you don't have 20%, being able to deduct mortgage insurance. Do you happen to recall off the top of your head what the income limitation is? Yeah, I know that number changes, and I know I'm putting you on the spot. It used to be about 100,000 or so.
I honestly don't remember, but it's at some point it phases out. The ability to take advantage of that deduction phases out the phase begins around 100,000 and it ends, and I'm sorry, I just don't remember, maybe about 150,000.
Right, but that gets somebody into a starter home here in the Bay Area, someone in that income range to be able to deduct that mortgage insurance premium if they don't have a 20% down payment. So that's significant.
Yeah.
That is significant.
How about in the area of retirement? Folks are considering, you know, trying to save for retirement and the IRA deductions and any changes there, or what would you suggest for folks to do?
No changes there, but certainly I've always been an advocate of sheltering money for your retirement, and because you're going to need it, and the limitations. If you're self-employed, you could do what's called a SEP and sock away a lot more money based on your your self-employment income. There are restrictions if you or your spouse are eligible to participate in a company-sponsored plan, retirement plan like a 401k plan. Then you have limitations on what you can put away that would be deductible. And there are things like, there are alternatives to that, like a Roth IRA. We've talked a little bit about that. You don't get a tax deduction, but you get some tax-free benefits.
Okay.
And my understanding, this is probably a good reason for someone to talk to a CPA, is the type of retirement plan that you choose, depending upon how your income comes in, varies greatly, right? From maybe a few $1,000s with a Roth to a couple $100,000 if you choose the right plan that you can shelter.
Yeah. And recently I've been looking at interesting opportunities when we're talking about IRAs and what you can do, where you could place your investments in IRAs. You can look into a self-directed IRA or a SEP, and actually again, following all of the rules and the regulations and the requirements, if it's self-directed, you could actually invest in things like real estate. We call them alternative investments, as opposed to traditional mutual funds, stocks and bonds. So it's an interesting area that I'm personally looking into, because it just expands the ability to make I think a better return on your investment in getting involved with real estate than some small return.
The subject of audit always comes up. Is there any advice you can give to someone? I know that you can't be fully bulletproof and audit free, but what steps can somebody take to maybe either are audits done randomly, or is there some kind of a trend that happens that folks need to be aware of?
Well, that's a tough one, but for individuals, the random audit I haven't seen in a long time. There's usually a flag, but only about 0.5% of people end up getting audited. I mean, if you sort of stick to the rules, the principles, and just don't create those red flags, then you're pretty safe. File a return on time. That's important. Pay your estimated taxes or your withholding. Make sure you're adequately withheld, because the penalties are just crazy anymore. And once you get into a situation where you owe the IRS money,
that could be a red flag too, huh?
Well, I don't know if it in and of itself would be a red flag, but it's just hard to get out of it. It's hard to, the penalties and interest, they just accrue and they accrue and they accrue, and before you know it, you have a negative, maybe a tax hit on your credit reports. It happens. It happens, and we can help with that too. I have helped a lot of clients that deal with abating penalties and setting up installment agreements and so forth. But how do you avoid that? It's file on time.
Well, let me ask. I mean, because some folks may be inclined maybe to file their own taxes, prepare their own taxes, or maybe go to a chain tax place and
we won't name any, but
and have that done. What benefit is there to be working with someone like yourself, a CPA, in the event that you're audited?
Well, we have the experience of probably certainly a lot more than the client or the taxpayer, understanding how to talk to the IRS, who to talk to. I heard recently that about 45% of the calls that are made to the IRS for get things handled, 45% go unanswered. I don't know, they hang up on you, or it just it's very, very frustrating. So somebody that whether it be a CPA or an enrolled agent that has a lot of experience in dealing with sometimes inside people helps, who that would be the benefit of going to just somebody with experience, CPA. And not all CPAs do tax returns. Surprisingly to a lot of people. I have a number of CPA friends that have their taxes done, and they pay for it because that's just not their area of expertise.
So, what do you like best about your job? I mean, you talked about being involved with families, helping people out, and obviously you're a number cruncher. What other benefits?
Well, a number cruncher, but that's just a tool. It's I know Todd here and yourself and dealing with you folks. You crunch numbers, but that's just a tool. To run a mortgage deduction and a tax benefit and everything. But what you're really doing, and what I feel that I do, is you just embrace the whole bigger package, and it's about people. It's about people. It's about relationships, and it's about community involvement. that's what I love about it, is just being involved and helping people's and their children, their estates. I guess you could say cradle to the grave. But and I've been in this business and in this community for a long, long time, and I've learned a lot. You learn a lot by talking with people and saying what their issues are, and being able to solve or suggest something new, innovative. They have a success. I have a success.
Good, good.
Terrific. Well, let's just end kind of on maybe looking forward. What are some of the things that you're looking forward to? We talked about what you enjoy. What are some of the challenges and things you might be looking forward to?
Retirement.
Not yet. You guys still do my taxes.
I just look forward to keeping up with the challenges, and I think I do a reasonable job of that.
You do.
It's the regulatory requirements, but it's what the challenges that we're confronted with is what keeps me motivated. It's just like tax season is a big motivational time. It's a lot of pressure. It's a lot of stress.
Yeah.
But you kind of get in the groove. And that's what I like.
Yeah.
And I want to continue doing that. And I want to help as many people as I can, because your success is my success.
Right.
And that's
Well,
who I am.
you are a standalone in my book. In the business. I really cherish the time that we've spent together doing that. And thank you for this. Please, phone number, contact information, email address. What would you like to give folks so they can reach you?
Phone number?
Yeah.
408-439-5933. My email address is Alan, ALAN, at AlanDavidCPA.com. Real simple.
Great. Thanks, Alan. Really appreciate you being
Thank
here.
you.
I think I heard from you today, having the right strategies and good relationships takes you a long way when it comes
it sure
to
does.
taxation. So thanks again for being our guest.
You're very welcome. Thank you.
In Vietnam, we took care of each other.
In combat, you look out for your battle buddy.
I do anything for my unit,
When things get tough, it's great to know
Somebody's there for you.
every step of the way.
DAV stands behind America's veterans to make their transition back home easier, with free services and help getting the benefits they've earned. Help us fulfill the promise to our men and women who served. Go to DAV.org to learn more.
Welcome back, everyone, to Valley Homes on TV. We're glad you're with us, and we're here to do a wrap-up, give you a little bit of an update of what's happening in the real estate market.
It's 2016.
We are a brand new year, and so we'll take a look back a little bit at this last year. I know that recently you went to a real interesting meeting, I understand, at the Real Estate Board.
I did. Well, it was actually through the Milpitas Chamber of Commerce.
Oh,
They had
okay.
a community breakfast here,
Okay.
and Larry Stone, our county tax assessor, was the speaker.
Oh, terrific.
And he talked a little bit about the local economy, and if I could share a few tidbits with you.
Yeah,
I'd
that'd be
love to.
great. Yeah, Larry's always interesting.
He's very interesting. So the one major factor is rents. Rents have risen by 11% over last year, and in fact, a one-bedroom apartment in Santa Clara County averages at $2,381. Can you imagine?
Wow.
That's amazing.
It is amazing.
Annual median income in Santa Clara Valley is only $115,000, so it's very expensive to live here. Home ownership is at its lowest percentage since 1937. Gen X, Gen Y, and the millennials are the most mobile population, and they prefer renting over owning, which I think we're seeing that. And then, of course, as they marry and have families, and that's when they kind of plant their feet and get their roots going. Schools are the most important indicator of property value, and vacancy for industrial rates are at 2.8%. Concerns for 2016 in this valley are gridlock, traffic issues, cyber crimes have increased, the income wealth gap has widened, the infrastructure is deteriorating, like the roads and pipes, and we're seeing that, of course, here in Milpitas. And then immigration reform. Those are, he points out, to be one of the top concerns for 2016. So let's talk. We have had a rocky start to the stock market.
We have, yes.
And in San Jose Mercury yesterday was why global woes won't mean U.S. recession. Let's talk about what's going on with the economy.
Well, yeah, like you said, the stock market since about the end of December and here into the early part of 2016 has been very, very rocky. A lot of that was precipitated with a market correction in China and a loss of some confidence in that market. And so there was a rapid sell-off in China. The Chinese government put in place some artificial stops. They actually stopped trading on a couple of occasions.
We had a big bump with 1,000-point decrease back in September of last year. So it almost feels like that again.
Yeah, we had that correction at that point. Then the market kind of shook that off and moved along, and now we've had this yet again in China. And so some of those other concerns have been international concerns as well, in terms of debt crises in Greece, in other parts of the world. And so we are a much more interconnected sort of global economy now. So what happens in China, what happens in Europe, impacts us as well, and impacts not only our portfolios as we look at retirement plans and our investment and our savings, but also it impacts what's happening with mortgages as well.
How about the falling gas prices? Do you think that has some effect too on the economy?
It does. It does. I mean, it makes some of our day-to-day sort of expenses a little more affordable. But I think one of the other concerns about that is that going to be deflationary in nature, which means the value of things dropping as opposed to increasing. And so typically with an expanding economy, you'll see actually inflation as a piece or a component of an economy that is expanding.
That's a healthy thing.
It can be a healthy thing. Yeah, hyperinflation like we had back in the late 70s and early 80s is a bad thing, but a little bit of inflation is good. In fact, the Fed has been looking at inflation with a target rate of about 2%.
Okay.
And we just have not been there yet, even over the last number of years. Now, big piece of news for folks, they've heard the Federal Reserve Board has increased interest rates.
Correct.
At the end of December, at their last meeting, they increased what's known as the Fed funds rate, which is the overnight rate that member banks, members of the Federal Reserve Board, charge each other to lend money on a short-term basis. That then impacts things like credit card loans, lines of credit, those sort of things that are adjustable rate in nature. A lot of folks think, well, now mortgage rates have gone up.
Pause right there. So there's an article in the Mercury. Should you wait on rates?
Mm-hmm.
So how does that factor in? How would you advise somebody looking at interest rates right now?
Well, I think we've talked about this on the show before, is the concept of a tug-of-war for investment dollars, right? Between stock market and bond markets, all right? Or investors can be in cash. Those are the three options really for investment. Stock market typically is going to be higher risk, perhaps higher reward though as well. A little bit when the economy is expanding and things are going well and humming along, the stock market really is where funds will go to. When there's uncertainty or the economy is slowing, then the safety of a bond, which a bond provides a set rate of return, right? In a mortgage, we actually get our mortgage money from a type of bond, a mortgage-backed security, right? So that instrument is traded in the bond market. And when the stock market is having challenges, when we're seeing declines in the stock market, then the bond market doesn't have to pay as high a rate of return to attract that same dollar investment. Okay. And we see interest rates then will come back as a result. So the Fed's action raising the interest rates just slightly, oftentimes that's a brake on economic expansion because now it's more expensive for short-term borrowing, which includes business loans sometimes, lines of credit for businesses.
But obviously, the feds must have thought the economy was pretty healthy.
They were reading the tea leaves that, yes, there was some strength in the economy. They thought they could, that it could handle an increase in rates. But again, the interconnectedness of our economy, the global nature of it.
That makes sense.
You know, the surprise of what happened in China has impacted, you know, all of our markets as well. And so.
Well, we'll have to keep a watch on that.
Yeah,
Maybe
so
we can report that
so,
in 30
yeah,
days from now. And
absolutely.
See where those signals are.
So your question about, you know, rates, you know, so if the economy and the stock market continue to falter, we're going to see really good rates.
What are rates today?
We're going to be for conforming loan in the high threes, 3.75,
That's amazing.
3.75. Yeah.
Who would want to wait?
Right. Well, exactly. I mean, the rates are absolutely fantastic, and so it's, you know, it's a great time if you haven't done a mortgage checkup in a while to do that. Or if you're thinking about buying a home, it helps with the affordability as well. It's a good time to check into that.
Good advice. Good advice. How about some numbers? We missed 1 month, so I like to report out in November.
Okay.
So here's some statistics for the Milpitas housing market. In November of 2014, we had a single-family average home price of $802,000 and a median price of $792,000. And that is expanded to, in November 2015, to $863,000 for average price and median price of $840,000. Now, we had found those numbers, some of them were over $900,000, if you remember. So it's not, you know, when you take, when the MLS takes all the houses and does a median price, you could have some high sales, low, I mean, it just, you have to look at month after month and kind of look over the full year to really see the price change.
Do you find that there can be some seasonal effect to that as well?
There could be.
Because we're talking about November as we're entering into holiday season.
Well, there's less comparable less sales and transactions, so we'll be seeing more of that coming. You know, although the inventory is very low right now. I checked Milpitas yesterday. There were only 13 homes for sale in the whole city of Milpitas.
That's it for the entire
That's
city.
it for the whole city. That's low, Todd. That's very low. So we're hopeful that the inventory will pick up here, and these buyers that have been on the fence and needing to get in, and you'll be seeing more open house activities and stuff coming through. So condos and townhomes, they kind of continue to amaze me, because we, again, have such a plethora of new building of townhomes. But average sales price in November 2014 is $581,000. Median price was $582,000. And that jumped to November of 2015 to $624,000 for a average price and $642,000 for townhome price. I remember the days, we were talking about how many years we've been doing this show, but Elrin says something like 7 or 8 years. I can't imagine that much time has passed. But I remember we were reporting out condos were down to, what, 250, 300, if you remember our numbers. So,
I recall that. And that was a handful of years ago when we were...
handful of years, and I just cannot imagine how they doubled, almost tripled in price. So we should have bought 10 or 20 of them. Did you?
I wish I had at that point in
that's
time.
Okay.
You know,
wish.
It'd be good to have a crystal ball, right?
Yeah.
But it's easy in hindsight to say that. You know, but people will oftentimes, ask, when is the best time to buy a home? You know, and it really is when you're ready to do that, right?
And with the huge increase in rents, I mean, it now still makes a lot of sense to jump in and
absolutely
plant your feet and buy a property.
As I do that in sort of analysis with folks now who are renting, are seeing big increases in their rents, as we do those numbers, for many of them we're finding that their cost of ownership actually is comparable, in some cases is less than what their cost is to rent.
With the tax benefits.
Absolutely.
And then just to have a place to raise your family and get in a good school, or and just be in a place where you can just stay as long as you want.
Well, the other thing that people don't think about sometimes as a benefit is when you buy a home, you've really locked in your housing costs, right? If you have a 30-year fixed rate loan, you know what your mortgage payment's going to be. No one's going to come and raise your rent, right? And so there's some stability with
Absolutely.
that.
That
And so
was-
that's a real benefit
Yeah,
for people.
It's always been the cornerstone of the American dream. so.
Absolutely.
Well, folks, thank you for watching Valley Homes on TV. Todd, contact information?
T. Flesner at Opus Advisors, and I think we'll get that up on the screen so we get the spelling.
Great. And you can email me at giordanodj@aol.com. Debbie Giordano. So.
Terrific. Well, thanks for joining us, folks. Happy 2016, and I look forward to bringing you more about what's happening in and around the Milpitas community.
Thank you very much.